it is those negotiating to determine what they want or what they can achieve together in this process. It is clear that the issue of this material must be addressed some way or another. And there are different alternatives that have been considered, shipping it out, down blending it. So it is for them to decide. The fact that there is this material is a fact. It is for them to decide. The IEA, what the IEA needs to know is that this material is not being diverted. It is accounted for, and we can check where this is.
Does the IEA have an idea of what survived in terms of centrifuges? How many when it comes to the U.S.-Israeli attack?
Not exactly, because we haven't been able to return there. However, we know these places very, very well. We know the different characteristics of the buildings, and we know the kind of kinetic force that was used there. We do have satellite imagery, so we have a pretty good idea of what might still be there.
We have a ceasefire. Is it part of the negotiations, the talks? Have you asked to get access to these sites, to get your inspectors back in?
Well, I would put it, more or less. I would put it slightly differently. It is the idea is that when there is an agreement, one essential component of that agreement is that whatever is agreed is inspectable, verifiable. In introduction, you were quoting something I said, that an agreement without verification is an illusion of an agreement. It's a promise. Who knows?
So I know you've been in touch with Steve Witkoff, Jared Kushner. Yeah. Have you seen or spoken to President Trump as well as the Iranian side?
I've been working with Special Envoy Ambassador Witkoff and with Dr. Kushner. Yes.
Are you closer to getting them back at the table?
To getting whom to the table?
The Iranians and the Americans back at the table?
To a certain extent, there is a table, and they have this table. It's on and off. But there is a conversation. Yeah.
Have you returned to Iran since February 28th?
Myself, or the IEA? Yes, partially. No, partially. Because we have been able to return to the places that were not attacked. Right? So the Iranians are making our return contingent to an agreement.
How much are you concerned that this episode will only reignite nuclear aspirations around the world in countries that see the success of North Korea and, frankly, the success of Iran, at least in the threat potentially to fend off this type of attack again, should they actually acquire a nuclear weapon?
I've heard that. And that is an argument that I frankly disagree with. And I'll tell you why. We've seen that all the commotion and even war, destruction and misery, proliferation attempts bring. You see this, and I'm not saying whether it was justified or I'm just telling you, see this. And let's go back in history. Let's go to Iraq. Let's go to Syria. Let's go to Libya. Every time there has been one of these attempts to get to a nuclear weapon or weapons of mass destruction, for that matter, there has been a problem. There have been wars. There has been death and destruction.
At the same time, in Bloomberg today, there was a big story about how North Korea is actually accelerating its production of nuclear weapons and potentially is on track to have one of the biggest stockpiles out there and potentially could overwhelm any kind of countermeasures in the region. I mean, at what point do you expect to see more of this, considering that there are nations that would like to immunize themselves from these?
We cannot exclude it. I mean, you have a point. We cannot exclude it. The case of the DPRK, I mean, they proliferated in 2006. So 20 years ago, almost 20 years ago, they decided to cross the line. They tested, they expelled the IAEA inspectors a little bit later, I must say, because it's a story that has lots of ups and downs and processes, not dissimilar in a certain sense with what is being attempted with Iran. Incentives of sorts, and then at some point that country, in a different geopolitical, geographical scenario, decided to cross the line.
North Korea, precisely the situation we're hoping to avoid. in Iran.
Well, exactly. And right now, they seem to be amping up the stakes, considering that there's a report about how much more they have in terms of their nuclear stockpiles.
Director Grossi, appreciate your time. And we know you're in the running to become the next UN Secretary.
That image.
No,
I think it's fun. I
them
think
running around in PJs at Federal Reserve.
no, longer part, actually. I'd rather have Armageddon.
Hard pass. What was that about?
Yeah,
Ah.
he worked hard on that.
Long day ahead on Wall Street. We'll see you later from New York City. Thank you. Producing Bloomberg TV. This was Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking,
We beat the drum to the opening bell.
with deep analysis of the forces driving the price action.
Focusing investors on what really matters.
for the first refugee
I'm gonna show half the position.
place. The footprint of where the ranch was built before the grid to sweep. Of course, I
Trail the rest to TP.
any concept requires practice, understanding, and
We'll go over the setup here
the cell, and also
after
levels against spot manipulation.
take back up. Well, at the open.
$2 the Fed decision.
Okay, so let's go over this setup.
Be surprised. The first question is along the lines of, are you going to stay? Now,
Let's look back.
it's like you're being concerned, but we'll have to find out, and then we'll wait for the earnings.
Just what we need on a super
Looks like it was down in London.
like you're gonna join us
Market
later
came
about that
down.
covered. Casey, you can
I noticed this candle here.
cover that decision kicking off at 1:30 p.m. New York time. Now, the Wall Street Journal reporting that President Trump was told she would
Graph here.
blockade of the
I
Strait
mean,
of
this manipulation candle.
pressure on Iran
And
state dinner yesterday.
aggressive sellers came in here.
Right now, too, if you might know. And we're doing very well. We have militarily defeated
they were getting absorbed.
And we're never gonna let that opponent
um,
ever. Charles agrees with me.
by buyers.
We're never gonna let that opponent have a nuclear weapon. They know.
After it came down at the news, which was an inducement here.
Does it look like we're in at this moment?
Well, Danny, at this point, it appears that diplomatic progress is stalled because it's very clear that it's not in favor of the latest bid that Iran has put on the table. In fact, you had President Trump posting at 4 a.m. Eastern this morning that Iran
Strong buyers came back. I mean, after the news,
could be in favor of the
multiple weeks. So
able to see
weak sellers
in exchange for the U.S.
in.
The thing is, Iran's proposal would postpone any sort of dialogue related to its nuclear program.
Swing for the entry.
That's just not going to be acceptable. Now, that's led the Wall Street Journal to report that in recent meetings, has opted to keep squeezing Iran's economy. And
We can get there at the open here.
Deeming that less risky than, say, resuming the military bombing campaign or exiting the conflict. This
Rest we can ride.
here about a timeline. The blockade has already been in effect. We're getting closer to that 6-day mark, but this is the course of action that the U.S. is pursuing, at least for
Value.
yesterday. Sent contact
We're below value.
another commercial vessel in the Arabian Sea.
Going back to value. Looks like silver as well as
Actually having a more sustainability.
the IB low.
Now it's this
Yesterday's low.
which is designed to
Take back.
China. Have we heard anything
Q is much stronger here.
in Iran to make some sort of deal?
Well, actually, Danny, one of the reasons President Trump said Iran originally came to the negotiating table for the ceasefire is that he credited negotiators in Beijing on trying to ramp up that pressure. But the
Problem with
US
the Q is we need a lot of breathing room when you're gonna, if you want to hold positions.
issued a warning to financial institutions not facilitate transactions
Because at the open, you could whipsaw and
that have
you know,
to Beijing
in the direction.
that number one consumer of blacklisted Iranian crude. It's part of what the Treasury Secretary is calling the U.S.'s maximum pressure campaign when it comes to squeezing Iran's economy. In his words, also citing the fact that the U.S. is estimating that Kharg Island is nearing its capacity levels.
Yeah, seen the inducement at the news at 8:30 news here. This is a massive bear candle, but you know, bulls came back and wicked it. Sellers
when it comes to
here.
and of course this is all
Massive buyer came in. Just looking to take back into value.
between President Trump and Chinese President Xi Jinping, just raising the stakes of this conflict. Tyler, thank you very much.
Can easily just range around until the open here.
Check on markets this morning because yes, oil is back at 115, but the VIX is at 18. And yes, we sold off yesterday, but it didn't really seem necessarily driven by Iran, more of a tech-led sell-off, which is why you're seeing tech bounce back greater this morning. The S&P is a little changed. The NASDAQ is up 1/3%, but 10-year yields keep grinding higher, as do 2-year yields. They're both back at March levels. Again, an equity market that is unbothered by that and unbothered by the price of oil. Some of the other movers on our radar this morning, some earnings to get through. Starbucks reporting better than expected quarterly results as its turnaround strategy showed progress. And the CEO, Brian Niccol, will be joining this show with Romaine Boston at the market open, so in only about 20 minutes time. Elsewhere, SoFi reported a 30% in rise in non-interest expenses, which was well above expectations. Shares getting punished.
Because the bulls couldn't take this level out, we can easily rotate back down now.
The forecast that was much stronger than anticipated. The chip makers really getting rewarded for strong earnings, up 15%. On the other side of the ledger, Booking cutting its outlook for travel as demand takes a hit from the war in Iran. CEO Glenn Fogel will be joining us just on the other side of this break to watching Bloomberg Open Interest.
This looks good for us.
Tensions are.
These bears stayed inside. They stayed inside this bull.
Narrative changes moment to moment.
Stayed
They're not.
inside range within this bull range.
For up to the.
Just shows bullish strength here. And
Perspective.
yeah, silver is wow.
The analysis you need
The
to.
guy found a nice pivot off of IB level and has rotated back up, is heading up back towards value here.
Like Bloomberg.
Massive bull candle on silver as well.
It's maybe first country inspired to me to, how can I use the different ingredients? First time we went to Peru, trying to culture food. I never had this ingredients, never used in Japan. Kind of like a, wow, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, completely different way. Example, they have the fresh fish. But Japan, the fresh fish.
So what we're really trying to do is trying to find absorption.
And wow. So then after this one, my open eye.
Trying to find
You start with the change.
the aggressors who, if aggressors are getting absorbed or are who's stronger. Are the passives gonna absorb and protect, check, or aggressive orders gonna go through and
the Lesotho highlights, and this is Bloomberg. Middle East and Africa, vibrant resources and high yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg. Let's get you some high interest stories and look at what's making headlines around the world. Republicans are weighing a plan to cut taxes on investments by adjusting capital gains for inflation, pitching it as a way to ease living costs before the midterms. Supporters like Senator Ted Cruz says that it could boost housing supply and investment, but the proposal faces legal questions, high costs, and criticisms that benefits would skew to wealthy taxpayers. And Bill Ackman's purchasing Square IPO raised $5 billion, including a $2.8 billion private placement. That is short of the upper bound of its target at $10 billion, but enough to launch two public entities. The move advances Ackman's plan to build a Berkshire Hathaway-style investment firm. Investors get a closed-end fund with no performance fees and bonus shares in the asset manager. And I will be sitting down with Bill Ackman. That happens today at noon on Bloomberg Deals. And the Avis short squeeze looks like it's over. Shares are falling after a wider than expected loss. And a major investor sold millions of shares. The stock, which was once up nearly 600% in just a matter of weeks, is now in a sharp unwind despite a small revenue beat and improving costs. So finally, the shorts went out, not after some pain.
looks like price still cannot break through this equal highs here.
Are hitting travel demand.
Sometimes when
when
there's equal highs set, like multiple highs here, usually you want to
like COVID, concerns about the economy.
down,
Frank, this doesn't have any sort of
more liquidity here, and then you'll come back for it later. But
of the war in the Middle East. And
I thought we really could just rotate back into value and
So I was there when
this was IB high from this was yesterday's IB high level, which is a very strong ceiling.
really bad for travel. And then you go into things like COVID, bad. For us, things we were very big in Russia, big in Eastern Europe. And then you have the Israel Hamas thing.
Below it.
You have this. And there have been smaller things like volcano in Iceland that takes down
Looks
your
like we are going to get taken out here, but it's all good. We got our profits early.
any travel business where things are going to come up and it's going to impact short term, but the long term's always the same. And the long term is people like to travel, and travel is always in the long run going to go a little bit better than GDP. So as long as the world economy continues to increase over time, we'll grow faster.
in the meantime, what exactly does seem to be the issue, Glenn? Is it just the fact that people can't get to the Middle East region, or is it sentiment? Is it pricing that's too high that's deterring people from traveling?
Well, I don't think it's pricing primarily. I mean, let's start with the basics. When there are drones and bombs coming down in an airport, people can't travel there. So right away you take it out, a lot of travel right there. Then the important thing is that places like Dubai or Doha, these are incredibly important transit airports for people who are going from Europe to Asia or people from Asia to Europe. Really big. That stuff shuts down, and all of a sudden you lost a lot of lift. And now there's going to be impact on that. Then throw on top of that consumer sentiment, people are concerned what's going to happen. That hits it. Your price point is a good one. Price is up. People may not want to travel, but all those things can compound, and all of a sudden you're not getting as much. For us, I'll tell you, the thing is, we know in the long run it's all going to come back.
Are you though preparing for increased costs? Just because even if the conflict does resolve itself, there's some questions to how quickly the Strait of Hormuz can open. I know in your outlook you have a recovery by year end, but Glenn, what is the tail risk? What is the risk that energy prices stay elevated?
Yeah, it could happen. I mean, everybody gets to guess at this, right? I mean, nobody knows. Nobody knows what's going to happen next. I don't know. You don't know. Well, nobody knows. But we know it will end at some point. We'll get to guess when it's going to happen. That's why people have to come up with their best guesses, what they think the long term, thing is going to be. We think it's going to be sooner. We think that things will be good. Starting, we talked on our call last night about second half of the year. We're looking for the recovery, but that's our assumption. Everybody can make their own assumptions.
What happens if that doesn't get cleared up in the back half of the year, Glenn? Is pressure enough that it gets even worse, or is that desire to travel, does it reign supreme over any headwinds to cost or otherwise?
Your point's a really good one. That demand for travel is so strong. We saw that in pandemic, right? As soon as a country opened up and allowed people to travel, they started traveling immediately and strongly. Remember, we called it revenge travel. That was great. Now, when that's going to happen, we don't know. And if the problem that we have in Iran continues for a longer time than some people are expecting, that's certainly going to impact travel during that time period. But that long term, that's not going to change. Come back to me. Look, when did travel really hit in pandemic? March 2000 or so. So now we're into April 2026. That's all long past, and things have come back really nicely. Why, come back to me in 5 years and look at where we are versus
More of an earnings story, more of an earnings focus for these markets than arguably what's happening in the Straits of Hormuz. But we continue to look at Brent, of course, oil up 0.4% in the session right now, holding above $111. About the S&P futures are pointing to modest gains of 0.2% after losses of about 0.5 yesterday. But the pain was really on the Nasdaq 100 with the OpenAI concerns there, dragging that index down around 1%. Again, European futures pointing higher by 0.2%. The countdown to the opening trade starts right now.
Welcome back, Chad. Welcome to the program. In fact, this is the opening trade, 6:58 here in London. Starting the program a little bit early then, Tom, because we've had so many earnings out and we want to get plenty of time to hear the comments of Sergio Amotti from UBS, which we'll get to in just a moment. Yeah. So let's just recap what we've heard from UBS then. One of the big banks here in Europe reporting numbers this morning. Of course, the Swiss government and their capital rules really front and centre. But at first look, the numbers themselves look to have come in well ahead of estimates.
Absolutely. A very strong beat in terms of the profit from the most recent quarter, getting profit above $3 billion US dollars, and a strong performance of the investment bank as well. So you saw investment banking revenue increasing almost 30%. So up there with some of the top US contenders. We saw a very different picture, of course, with Barclays yesterday on the investment banking side, the fixed side of the business. But investment banking revenue at UBS coming in very strongly indeed, increasing 30%, capitalizing then on that market volatility. Yeah. And interestingly, the weaker US dollar as well.
Yeah, absolutely. So a standout quarter for equities capital markets is the way that the bank describes its performance. Record equity trading, as you've been suggesting. Over in wealth management, inflows there coming in better than expected. And it's interesting to think about client activity. Perhaps we'll hear more about this from Sergio Amotti, because they're painting a quite resilient picture for now, saying that client activity is healthy for now. But there have to be lots of questions, I suppose, about that, given the wealth concentrated in the Middle East and what clients might be doing with their money, thinking about a prolonged conflict.
You know, there's caution around those regulatory and capital requirements. They have a line here in terms of buybacks, $3 billion US dollars in shares by the second quarter results. They aim to do more, that line crossing as well. Those capital requirements, that debate, the pressure, the lobbying campaign from UBS, we know that continues in terms of the relationship with the Swiss government. That could cost ultimately around $20 billion US dollars. We know that is central to how they're thinking about the future as well. Guy Johnson sat down with the CEO of Sergio Amotti and started on buybacks.
We are giving an update this quarter by saying that we believe we're gonna complete the $3 billion buyback by the end by Q2 results, so by the end of July, which is clearly a change compared to what we said before, which was we would do $2 billion. So I think that in that sense, what has changed is that there are 2 or 3 conditions for on how to manage capital returns. One is progress on integration, which we tick the box with the migration of the Credit Suisse clients into our Swiss platform. Number 2, the financial performance. You saw the strong results in the first quarter, and our ability to maintain a capital level at around 14%. We are at 14.7%. So I do believe that we delivered on some things. The uncertainty around the regulation is something that is going to take time, and is definitely will influence our capital return plans, but it's not the only condition.
Okay. Do you expect any clarity by next quarter on that front?
Not a lot of clarity. I think that if you look at the political processes starting early next month, so in a week time, and I think that it's going to take time. This is a complex matter. 2 years of discussions, we cannot really defend it. So we are happy to be able to continue.
Okay, we'll maybe come to that thought in just a moment. Normally water sticks down. You expect it to water this down, the foreign subsidiary 100% rule. You think that gets watered down by Blanc?
I honestly, I don't think I am hopeful. I don't expect it. Okay. There's a big difference between being hopeful and expecting.
What do you want out of it? What would be an acceptable? You're lobbying hard. What's the end point that you want to get to in this lobbying? What would be?
We're not actually hard. We are just focusing. Interest of is our duty and right to basically highlight what are the consequences to our shareholders, to our clients, and also to the
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The UAE's shock exit from OPEC blindsides partners and dilutes the cartel's ability to steer oil prices via supply cuts. Energy Minister Al-Mazroui tells us it's the right time due to the war in Iran. Traders focusing on the next steps for peace talks as President Trump reportedly tells aides to prepare for a lengthy blockade of the Strait of Hormuz. Plus, European banking majors UBS, Santander, and Deutsche Bank set to report first quarter results. We'll break the numbers later in the show. For it sits on 8 a.m. across the Emirates, I even want to perspective in Dubai. Where to even begin? There is so much to get through in the show today, but of course, the major development, earthquake announcement from the region yesterday, the fact that UAE has announced that they are leaving OPEC Plus as of May the 1st. So we are going to spend a good chunk of the show talking through what that means for the group, for energy markets, and clearly a focus there. And then also in the interim, still very much focused on the geopolitical developments and the fact that essentially we haven't got a formal response yet out of the US. That the proposal, the Wall Street Journal are reporting that President Trump is quite happy to keep the blockade going indefinitely. So a couple of things there to note. But of course, when it comes to markets, we've got the Fed meeting coming out today. No change expected. It is Fed Chair Jerome.
So again, my analysis was wrong.
Plans and whether he plans to stay on as a governor.
Solution does not necessarily mean
On the economy and the state of the economy and what that might mean for their reactions.
whoever's more aggressive. But clearly that IB high was the ceiling and sellers protected that level. So sellers stepped back in,
Once again, surrounding
knock it down. Now it looks like it could possibly try to rotate back, but we're still inside this massive opening bear range. We're waiting for the IB to form here. So
higher and higher and higher. Remember,
values for value and
emerged as uranium thing that's pretty fully, but
checked and came back down.
now have since starting to jumped up more than $20 a barrel. So it just tells you that the squeeze on this market continues to bite. Now, USD also tweeted flat ahead of the Fed meeting, and then also a whole bunch of Magnificent Seven earnings that are dropping the next couple of days. So let me just bring you a key number of figures that we need to watch out for, because in terms of representative, about a quarter of S&P 500 values are going to be released for their earnings over the next couple of days. So let's start with Microsoft. Microsoft investors there watching for cloud sales of the Azure can they beat the guidance of 37 to 38%. That's coming up later today. Meta as well, also set for their strongest revenue expansion since 2021. Per Bloomberg Intelligence, improved ad pricing and targeting suggests that their AI investments are actually paying off. So we've got Amazon here. We're also watching out for revenue growth, which has seen about 13% for the fourth quarter in a row, with Amazon Web Services expanding at its fastest pace since 2022, I could say. However, AI-related investment continues to weigh on profitability, so something to watch out for there. And then Alphabet also today, like Microsoft, are watching out for cloud growth. Revenue from the Google Cloud segment is forecast to grow 50%. AI also saying its newly unveiled CPU chip should support cloud market share increases alongside its potential $40 billion investment in Anthropic. And then finally, we have Apple. That's not today, that's tomorrow. And the expectation is that sales could come in higher than its guidance, boosted by strong iPhone sales in China, a double-digit jump in services revenue, and a possible upside in Mac sales. So, Magnificent Seven earnings. There's a lot of those coming. And let's get back to our top story. President Donald Trump has told aides to prepare for an extended U.S. naval blockade of the Strait of Hormuz. The Wall Street Journal reports the plan is part of U.S. efforts to intensify economic pressure on Iran. That is as the war enters its third month. And to our other top story,
The UAE's stock announcement to quit OPEC in a matter of days. The group's third largest oil producer has blindsided its partners of 6 decades. The exit will dilute the group's ability to manage the oil prices by adjusting supply. UAE Energy Minister Bahil Mazroui told me why this decision was taken.
This decision is taken at the right time in our view because it's not going to hugely impact the market. The market is under supplied, and because of the unfortunate closure of this Strait of Hormuz and the level of inventories that we have unfortunately seen the world go through this unprecedented time where the level of inventories are going down significantly would require an extraordinary measures that with the agility of the UAE decision making, we believe leaving the group now will enable us to attain to the market requirements at a pace that is appropriate from our point of view. And we don't want to be constrained by any other groups in taking that decision.
For more, we are joined by Anthony DePaula, our Middle East energy markets reporter. Anthony, I've been describing this as shocking, but perhaps not surprising. What was the reaction in the energy community yesterday to the news that the UAE are leaving OPEC?
Good morning, Giovanna. Nice to see you. As you say, it's one of those things that's maybe shocking but not surprising in that this was an effort, a strategy that had been building in the UAE for a while now. Perhaps what people didn't expect was the timing right now. So there was some surprise perhaps at the timing, but not at the general push of the UAE policy. And of course, what we saw in the oil markets was a simple blip. We saw them drop off a little bit and then steady. So that was kind of seen as a little bit of a positive, I think, from the Abu Dhabi circles that they were able to avoid a major reaction. Of course, something like the UAE leaving OPEC should be long-term bullish for prices because, bearish for prices because they will be looking to put more oil on the market. And that's the picture that we see this decision in, is that the UAE has for a long time been investing major money in expanding its oil and gas production, in expanding those big oil fields in Abu Dhabi, along with major US, European companies, Asian companies as well have entered recently. So we've got Exxon, BP, we've got Indian producers, we've got Chinese producers, lots of different international companies in there who want to be able to invest, produce those fields and earn that money. In the optics of OPEC, still working through some of these post-COVID cuts that they had that's been restraining production. So that's what the UAE is trying to get out of. And this big chunk of production coming out of OPEC is going to hurt OPEC's ability to manage the market. Remember, we're talking about OPEC Plus, an expanded group which was done exactly to give OPEC Plus more control, more share of the overall oil market.
Yeah, interesting what you're saying about their partners, their international partners, because also we had a comment put up by the ADNOC CEO, Sultan Zebra, yesterday, reaffirming their commitment to their partners, both regional and international. But to your point, Anthony, we've seen actually very little reaction in oil markets today, which perhaps vindicates their decision because they haven't caused a massive disruption, at least imminently, in terms of what the oil markets are pricing in. And we are still very much focused on what has been happening around the Strait of Hormuz. Wall Street Journal reporting overnight that President Trump is happy to keep the blockade going indefinitely. What would that mean more short term for the pressures that we're seeing in the market?
Yeah, they want to put tighten the noose around Iran's economy. There's the oil of their lifeblood. Iran, you also already see it, is chafing against that. Is loading oil on the tankers, waiting to try to get them out. So this idea of keeping that pressure tight is to draw down the economic ability of Iran and its ability simply to function as a country, with the idea of hurting that military ability to respond. in the short term, though, I mean, we're seeing no oil coming out of the Persian Gulf right now because of that Hormuz blockage. During the longest period of this war, Iran was obstructing other vessels from going through, but keeping its own oil running through the Strait of Hormuz. So we had seen Iran's exports roughly stable with where they were before the war, and Iran was even letting some other friendly vessels, let's say, through some shipments to China, some to Pakistan. So there was a trickle coming through. We also had UAE with a pipeline outside of Hormuz, the Saudis with a pipeline through the Red Sea. So they were continuing some exports. But really what we're going to see is this full closure of Hormuz as the U.S. blocks off even that trickle of Iranian flow. And we do see also some increased risks there because the U.S. has interdicted some vessels, turned some Iranian ships around. So this is some added risk for conflict in Hormuz. And Iran is also risking retaliation against some of the other Gulf countries. So it is that long-term squeeze with a lot of short-term risk and no relief for the oil market, Giovanna.
Yeah, long-term squeeze with short-term risk. That's exactly a good, very good description of what's going on there. Anthony DePella, our Middle East energy markets reporter, thank you so much. Joining me now is Amir Hamjani, non-resident fellow at the Quincy Institute for Responsible Statecraft. Really good to have you with us. I actually want to start with the OPEC news, and I want to get your take on it and whether you think the UAE's decision to leave OPEC was an economically motivated one or whether it was politically motivated.
It's always nice to be with you. I think it was both. It had dimensions of both. Economically, because there's always this tension in OPEC since before the pandemic between Saudi interests, which was really to maximize profit, and the UAE's interest, which was to maximize output. And they didn't want it to be subordinate to Saudi interests within OPEC anymore. As your previous analyst said, they had the financial wherewithal to make these investments and to increase production. And the OPEC quotas simply didn't serve the UAE's interest moving forward. There was a political dimension to this too. After the war with Iran and the tremendous hit the UAE took, more missile and buildings than any other country in the region. It sees its future in closer military and security alliance with the United States. And they've said that, leadership of the UAE has signaled that. And that the United States, President Trump dislikes OPEC. It dislikes the cartel. It wants, he has said many times over his decades in interest in politics that the U.S. was protecting OPEC and there was a tension between U.S. interests and OPEC interests. So the fact that the UAE is breaking away from OPEC also signals to walking to the closer alignment to its interests.
But my Bosch fridge keeps my food fresh longer with Vita-Fresh. I feel like Guy.
Sensitive mouth and gums? Ever heard of Closest mouthwash? Your dentist and hygienist have. They know Closest is ultra gentle for sensitive mouths with non-burning mouthwashes that freshen breath, improve gum health, and strengthen teeth. Closest, the gentle mouthwash for sensitive mouth.
Style and substance. In the GMCC era, we'll get a total value.
Hiring a lawyer after an act.
Closer to the U.S. So what about the rest of the group? What happens to OPEC from here onwards?
Well, it's losing its third biggest producer. That's structurally very significant. I think the group moves forward, but it moves forward weaker under Saudi leadership. And right now, that leadership is going to be tested, obviously, because of what's happening in terms of Hormuz. There's people coming out of the Persian Gulf. But at some point, they're not going to, once this conflict resolves, if there's a diplomatic settlement, come back into the fold. If the production is going to come back into the fold, if that's not going to be enough to make up the difference from the loss of the UAE. And
there's going to be tension between the UAE and its neighbors in the region and the OPEC cartel as a whole.
Yeah. Do you see any other countries following suit and leaving as well? I mean, UAE is certainly not the first to leave. Qatar left in 2019, Angola as well. Could this set the precedent for others?
Those are more idiosyncratic and smaller. The volumes of Qatar and Angola didn't match the UAE's volume. UAE is the heavyweight, was a heavyweight within OPEC. It could, but the UAE is unique amongst its countries because it's a surplus country, and it had the desire to really flood the market with production and not be inhibited by OPEC.
Everyone, today we are going to be.
They don't want its interest to be subordinated to Saudi's interests. The other countries within OPEC right now that don't have this spare capacity that the UAE had. Most of them are not surplus countries that the UAE is, so doesn't have those reserves to bring to the fold.
Yeah, which is, I guess, one of the key catalysts over here for the decision in itself. Look, assuming at some point the strait does reopen, which is a big assumption at this point, what do you think the medium-term impact is going to be on oil prices? And given the fact that UAE will now be able to produce as much as they want because they're not going to be restrained by collective decision-making, are we going to see a war, so to speak, of market share?
I think you will see a war of market share, but I don't think you're going to see it in the short to medium term, because in the short to medium term, they've got to get those vessels out of the Persian Gulf. And your guess is as good as mine when this ends. It will end at some point, but whether that's going to be in a couple of weeks or a couple of months, or it's going to take another war to resolve, you just won't know. So in the meantime, the UAE and Saudi are using the pipeline, the Fujairah pipeline, to get some oil out. The Saudis are using the Yanbu pipeline to get some oil out.
Yeah.
Prices are higher, and they're going to remain higher until the situation resolves. Once it does resolve, once those ships are cleared out of the Persian Gulf and the market stabilizes, then that's when the UAE is going to really bring that excess capacity to bear. And long term, I think it is bearish. It's going to be bearish for oil prices.
Okay, Amir, really good to have you on, and thank you for staying up late for us. I know you're in New York right now. Amir Hadjani, non-resident fellow at the Clinton Institute for Responsible Statecraft. Well, coming up, we discuss investment strategies during these volatile times with Vincent Juvin from ING Belgium. That's next. This is Bloomberg.
Excuse me.
Welcome back to Horizons Middle East and Africa. I'm Jumana Brasecki in Dubai. Markets are awaiting major catalysts in the next 24 hours. The Fed decision later today will set the tone for the policy backdrop, while back-to-back tech earnings will determine the narrative for the AI trade. On the geopolitical front, a protracted Hormuz blockade continues to be a risk. And joining us now is Vincent Juvin, Chief Investment Strategist at ING Belgium. So there's a lot going on in the next couple of days. Maybe let's just start with the big central bank decision, that is the Fed, that's coming up. Obviously not expected to change rates, but a lot of focus on the Powell's last meeting. How do you think it's going to sound in terms of the Fed's reaction function to all of the incoming data and, of course, the fact that oil prices continue to tick higher?
Well, so far, I would expect an expression about vision about what's going on, but definitely we'll have to discuss the decision or comment about what the Fed is going or not to do. The Fed was expected to lower rates this year. I still believe that that will be the case at some point, as long as we are confronted with a temporary energy shock supply driven. The Fed should not overreact. We've seen inflation, headline inflation move up in the US, but so far, let's say inflation expectations beyond 1 year remain well anchored. So I guess everybody hopes that this conflict won't last forever. If that is the case, if we have a temporary conflict, I guess we could look beyond this quarter or two for inflation and contemplate again declining inflation after that. So for the Fed, this means that rate cuts are still on the table for later this year, especially with Kevin Walsh leading the Fed will at some point this year.
Yeah, one thing I was thinking about is an extended ceasefire is obviously bullish for stocks. An extended blockade will continue to put upward pressure on energy. Are those two positions compatible? Can you have equities continue to outperform in an environment where the US and the Iranian blockade around the Strait of Hormuz continues?
It depends which equity. It's not bullish for every market, obviously. And we have seen in the war, the start of the war in Iran, that there have been differentiation on the stock market. For instance, European market has struggled in this environment, more dependent from energy imports than other markets such as the S&P 500, or even the MSCI EM index fared well better, much better than other indices. So I would say in this context, differentiation will be key. And focus on those markets which are less energy intensive or less energy dependent from the Middle East will fare better. What we've seen over the last couple of weeks, that market managed to move from the geopolitical concern back to earnings. We've seen that pretty well last week, where the US was driven by very positive earnings momentum. So yes, and to my great surprise, market from time to time managed to trigger those stagflatory fears coming from the world.
Yeah. One thing that I was discussing with an Asian strategist the other day is the fact that for many Asian economies, if they're oil importing, they tend to be cushioned by if they have a strong semiconductor industry or tech industry. Not the case, obviously, for all Asian economies. Let me put the same question to you in the context of Europe and how you think the sustained closure of the Strait of Hormuz, this sort of cold conflict that we're in right now, is going to continue to compound some of the growth pressures facing Europe in the months to come.
Yeah, unfortunately, we are once again in a bad situation like we were in 2022. Deep effects, I would say Europe to some extent have learned the lesson. What I see and hear in Europe is that obviously the emphasis on the need, the urgent need to further diversify their energy mix is there. When you hear policymakers, it's all about supporting the population to be able to move to heat pumps for their houses, to EV help for EV buying in France, for instance, to help cushion and be less dependent from oil going forward. What I see also is that it's demand destruction. People are driving less these days than what they would normally do. So clearly this shock is affecting the European economy. The industry was already struggling and it's not helping. We've seen that the industrial production was already weak ahead of the Iran conflict and it's only getting weaker. We've seen it recently with low PMI, not yet in manufacturing, but that will come.
Yeah. Very quickly, just to round things up, where are you allocating right now?
Well, given the uncertainty about the opening of the Strait of Hormuz, we remain fully in taxation mode in our strategy. So no big directional bets, neutral equities, within equities, opportunistically in those sectors which will fare better. Tech, we need to prove it today with earnings. Renewable infrastructure on the private market side are definitely area we are looking at. And from a regional standpoint, I guess, emerging market standards. We try to avoid rate in our portfolio because of inflation stuff is really fuel rate hike, rate rise across the globe. Focusing on the penny of the yield curve through credit.
Great stuff. That's everyone. Thank you.
Thank you, Jumana.
Thank you. Now for a look at some of the other stories they're following. The former Iraqi Prime Minister Nouri Maliki has ended his bid to reclaim the role after pressure from the US, which was concerned by his close links to Iran. Iraq's coordination framework has now nominated Ali Zaidi to be the next prime minister. The US has been trying to counter Iran's influence in Iraq and sees a Western-friendly prime minister as crucial. And King Charles has used an address to Congress to call on the U.S. to maintain its leadership role in the world and to support NATO and Ukraine. The King's unusually pointed remark came with very strains that President Trump's criticism of the Prime Minister Keir Starmer over issues including the war in Iran.
The commitment and expertise of the United States Armed Forces and its allies
lie at the heart of NATO, pledged to each other's defense, protecting our citizens and interests, keeping North Americans and Europeans safe from our common adversary. Our defense, intelligence, and security ties are hardwired together through relationship measured not in years, but in decades.
I would advise you to watch some of the full speeches that are part with each. Okay, so this is the close for some of the regional bourses yesterday. A day of the red, that Tel Aviv index down 0.6%. It's a Dow marginally positive. Let's see how things open up today after those the OPEC news. And then the other indices also in the red. Now, coming on with this foreign capital director Nadia Martin Wiggins and what they do and decisions of legal OPEC news.
Well, God, looks like we got us a little seating situation. Do we want to be again?
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. The UAE's shock exit from OPEC blindsides partners and dilutes the cartel's ability to steer oil prices via supply cuts. Energy Minister Ahmed Rouai tells us it's the right time due to the war in Iran. Traders focusing on the next steps for peace talks as President Trump reportedly tells aides to prepare for a lengthy blockade of the Strait of Hormuz. But European banking leaders, UBS, Santander, and Deutsche Bank set to report first quarter results. We'll break the numbers later in the film. It's just gone at 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. So big news this morning. UAE have announced that they are leaving OPEC as of May the 1st. No imminent reaction to oil markets because of the effective ongoing closure of the Strait of Hormuz. But of course, does raise a lot of questions for later about the fate of the group and of course what this might mean for future oil production once things normalize. So a big one over there that dropped yesterday afternoon. And then looking ahead, we have a whole bunch of different milestones to get through, including that Fed meeting later today. We'll see whether the Fed sounds a little bit more hawkish. Remember, Bank of Japan yesterday sounded a bit more hawkish with their own messaging on back of the inflationary shock coming through from the region. Let's see if that also transpires with the Fed. In terms of where markets are trading, gold, pound over ex-Japan from MSCI, Japan's out for holiday today. Leaning towards positive, so up 0.3%. The S&P seeing some green in futures this after a bit of a pullback yesterday. Once again, some concerns around AI. We'll see journal reports suggesting that OpenAI were not meeting their growth objectives. So that sent some fears for the market. The market seems to be turning those up though. Brent, once again, back to $111. So we keep creeping higher. And of course, here the focus is on the restriction of physical supply and the fact that this market continues to tighten day after day as long as the strait remains effectively closed. USD not doing a whole lot as we head into the Fed meeting. But we do have a whole bunch of Magnificent Seven earnings coming through. Let me run you through them very quickly. So starting with Microsoft today, we will be watching out for Azure cloud sales growth. Can they beat that guidance of 37 to 38%? So big question for Microsoft investors there. Switching over to Meta, we also have Meta. They are actually set for their strongest revenue expansion since 2021. So it looks like it's going to be a very strong quarter. And per Bloomberg Intelligence, improved ad pricing and targeting suggests that their AI investments are actually paying off. Switching over to Amazon, here we're also watching out for revenue growth, which is seen above 13% for a fourth quarter in a row. with Amazon Web Services expanding at its fastest pace since 2022. However, and this is noted by our Bloomberg Intelligence colleagues, AI-related investing actually continues to weigh on profitability, so watch out for that there. And we're not done yet. Alphabet also reporting today, like Microsoft, we're watching out for cloud growth. Revenue from the Google Cloud segment is forecast to grow 50%. BI also saying its newly unveiled CPU chips should support cloud market share increasing alongside the potential $40 billion investment in Anthropic. And then that's all today. Tomorrow we have Apple, and the expectation there is that sales could come in higher than guidance, boosted by strong iPhone sales in China, a double-digit jump in services revenue, and a possible upside in Mac sales. So all of that to watch out for. Let's also check in on how markets this morning are trading in Asia. April Hong is in our Singapore studio.
Yeah, Jumana is also about tech for Asia. I mean, following on from OpenAI pretty much missing the mark on their own targets for new users and sales, we saw that rotation, right, out of the US, the AI trade, and that's playing out in the region. You're seeing the Taiwan stocks underperforming. South Korea, you also saw earlier in the session, the chip stocks coming under pressure, though that's reversing somewhat at the moment. And this is against the backdrop of that pullback. I mean, given how we are running into the mega cap earnings and the Fed, I'll be more surprised if we don't get those wobbles. If you think about it, I think it's still the structural rebalancing that's at play. Yesterday, I talked to you about how Korea is surpassing the UK in market cap. Now we're seeing Taiwan overtaking Canada. So the AI darlings are really benefiting against this backdrop. What's also interesting today when you talk about tech is what's happening on Hong Kong and the China stocks, as the Hang Seng Tech, that's an index that has been underperforming just a day ago. For some reason today, we are seeing it in the green, and I think the extent in which it doesn't really have AI hardware as part of its composition is helping it somewhat, because those are the stocks that are coming under pressure in Hong Kong today. Consumer tech in China, that's doing well. So Alibaba's, Kuaishou's, for example, and that's what we're seeing in the region. Jumana?
April, thank you so much. April Hong in Singapore. President Donald Trump told his aides to prepare for an extended U.S. naval blockade of the Strait of Hormuz. The Wall Street Journal is reporting the U.S. is looking to intensify economic pressure on Iran. This comes as Tehran signals it may be willing to accept an interim deal to reopen the strait in exchange for Washington ending its blockade of Iranian ports. And back to our other top story today, the shock decision by the United Arab Emirates to quit OPEC and move that blindsided its partners of 60 years and cuts away at the group's ability to influence oil prices. The exit of one of OPEC's most influential members and third largest producer exposes deepening fault lines over output restrictions between the UAE and Saudi Arabia, the group's de facto leader. But the UAE foreign minister tells me the decision was not politically motivated.
It has no political link. Our relationship with all of the producers will remain fair. They are neighbors, they are partners in many shapes and forms. And as an active and a proactive producer, the UAE will always be there. We're not disappearing from the market. We are a responsible producer. We just want to have the freedom to take the decisions that is required due to the situation that we are living in.
Joining us now is Fund Capital Director Nadia Martin-Wigan. Nadia, well, there have been reports of a rift and the fact that UAE were really chomping at the bits to increase production. What do you make of the timing of the decision? The fact that the UAE announced now, in the middle of a, I say, frozen conflict with Iran, to leave OPEC?
Yes, thank you for having me this morning. So what we saw is that the UAE was increasingly becoming the second most important player within OPEC as Russia stepped down because of the Ukraine war and the difficulties there. And then they weren't so much a decision maker at the table. And as the UAE increased their capacity production, the country became increasingly important within the group. What we view of the timing now is that there's been a growing rift within the GCC on how this fallout of Operation Epic Fury is affecting the countries. And what we saw is when Iran attacked its neighbors specifically, it hit countries very personally, very individually. And in our view, this is really about making a closer relationship with the US and President Trump. President Trump has been very much against OPEC as a group controlling oil production. And this, in our view, is a carrot to the Trump administration saying, when you get this Strait of Hormuz open, we will be producing as much oil as possible to bring down gasoline prices and work with in a capitalist system providing all the oil the market needs.
Yeah, what does this mean about the relative influence that the remaining members of OPEC are going to have on stabilizing oil prices in the future?
So when we look at the spare capacity, some, according to the IEA, they thought prior to this conflict, we could have had as much as 5 million barrels per day spare capacity within the group. But from our viewpoint at Svelland Capital, it's much lower, from 1.5 million, maybe 2 million barrels per day. And that was really helped by Saudi Arabia, UAE, a little bit on the edges by Kuwait, Iraq. But Iraq is not easy to bring up that production. Now, when we look at the situation, Iraq has had to shut down production and has hit pressurized wells and things like that. So they'll actually be the slowest to ramp up. So when we look at that pricing power within the group, the pricing power comes from having spare capacity. So that is definitely lower in our view going forward without the UAE playing along.
Yeah. Okay, Nadia, let's turn to the more short term and what's been happening with the energy market. The fact that Wall Street Journal reporting overnight that President Trump is comfortable keeping the Straits Strait blockade in place indefinitely. At the same time, we continue to see oil prices creep higher and higher. How much further do you think we can go the longer this state of mutual blockade continues forward?
The problem with the mutual blockade is that the Iranians have said they don't want to meet and have talks while the U.S. has this blockade on. Initially, President Trump had suggested it would last a few days before tank tops were hit at Kharg Island. By our estimations, it would take minimum 2 months to really reach those tank tops, possibly as long as 4 months. Kharg Island has around 90 million barrels of capacity to store. And we've had a lot of ships sailing out. And, when we looked at last month, we had around more than 2 million barrels per day of Iranian crude creeping out. Now they're, of course, trying to truck, send it by rail, all the way to China and so forth. And Iran is very used to having these sanctions. And this, again, is, so when we go back to the UAE points, is that I think there is an appetite to have the U.S. consider escalating to get this Strait of Hormuz open sooner than in the coming months. President Trump likes to have every option on the table. And so we shouldn't forget that we have U.S. aircraft carriers coming to the region, and maybe he will put additional pressure onto the market, which hasn't been priced in at all in our view. Everyone is thinking we're about to have a ceasefire. That has been the trend. And now we have to remember there's a risk of escalation as well.
Yeah, well, where does the oil go to if we get another round of hostilities?
Well, we could hit another high, a higher peak in the Brent market. On the physical side, what we see is refinery margins are strong. We expect OECD online stocks to draw about 3 million barrels per day during the month of May. This is when we start to see that tightness in crude, and then that will mean real tightness in products in the month of June. So we could hit a new high. On the other hand, if the futures market gets ahead of itself, then we will have negative margins again, and we will have increased run. Very interestingly, we have China continuing to push the teapots to import crude, even with loss-making margins, even while the U.S. continues to sanction individual teapot refineries that have been taking Iranian crude. And then you have the national oil companies asking for an FDR release and also asking for the right to export products. So this is where China's been really taking care of itself. And on that foreign side, they are towards the OPEC on the refined products, and they're keeping everything at home. So maybe the Chinese think that this will last much longer than the markets.
Nadia, really good to talk to you. Thank you so much. Nadia Martin-Wigan, Spellens Capital Director. Well, coming up, we'll discuss the situation in Mali after deadly attacks gave a blow to Russia's security role in the Sahel. More next. This is Bloomberg. Welcome back to the Horizons Middle East and Africa. I'm Monica Saki in Dubai. Well, it is earnings season, and we are just getting some earnings dropping through now from UBS. First quarter net income 3.04 billion versus estimates of 2.42 billion. So big beats coming through from UBS. They are confident in 2026 financial targets, that is some of the guidance that they're given. Client activity is healthy, risks still elevated. They also say that they aim to buy back at 3 billion in shares by second quarter, but also aiming to do more. So perhaps signaling an intention to increase the share buyback proportion. First quarter investment bank pre-tax profit also big beat there, 1.21 billion versus estimates of 883 million, and that of course is in line with what we've been hearing from the other banks reporting strong on trading for the past quarter. But essentially big beats coming through from UBS, and we will be speaking to the UBS CEO Sergio Amati this morning. Catch that interview on Bloomberg Television at 7 a.m. UK time, 10 a.m. over here in the Emirates. And it is not just UBS that dropped. We also have Santander results coming through as well. First quarter net income 5.46 billion versus estimates of 4.97 billion. So a beat for first quarter net income for Santander. First quarter net interest income coming through as well, higher than estimates, 11.02 billion versus estimates of 10.87. In terms of the net loan loss provision, also a tad higher than expectations there, 3.23 billion versus 3.17 billion. So a beats coming through from Santander as well. On the top line, we'll be speaking to the CFO, Jose Garcia Catera, at 7:15 a.m. UK time, 10:15 a.m. here in Dubai. Now, Mali is reaffirming its ties with Russia after deadly attacks raised new doubts over its security strategy. The president, Assimi Goïta, says cooperation with Moscow will continue despite questions over its effectiveness. Our chief Africa correspondent, Jennifer Savazada, joins us from Johannesburg. Jen, walk us through what is happening on the ground in Mali right now.
Well, Jumana, questions really started swirling about where this leaves Mali after the killing over the weekend of the defense minister, Sadio Kamara, in Kati. And it wasn't just that. After we saw the killing, we did see simultaneous attacks at a number of military sites across the country. And thereafter, which is what a number of analysts are pointing to, the withdrawal of Russian-backed Africa Corps, is what they're called, from the strategic town of Kidal, which is strategic because just a few years ago, we did see this Russian-backed Africa Corps take control over the town in 2023. So the question is, even though we are hearing from the president that they are doubling down on their cooperation with Russian forces, where does this leave the cooperation with Russian forces, especially as you look at some of the simultaneous attacks that we saw across the country? If we look also from an international perspective, we heard the African Union condemning some of the violence that we saw over the past 2 days, and also the UN weighing in on the humanitarian role that this is taking, saying that even before the crisis, we saw 6.4 million human beings in Mali that needed humanitarian aid. Clearly, this is an issue not just for the country, but for the region, which many people are beginning to weigh in on over the past few days.
And what does it tell us about the broader security outlook in the Sahel right now?
Well, the concern really, Jumana, if you take a look at Mali, it's the eighth biggest country in by land mass on the continent. And it's not just that. There's also the fact that it borders a number of countries, about 7 West African countries. So the reason why there is so much focus on what is happening in the country is because it could very easily, the security situation could very easily leak into a number of the other countries in the Sahel. You mentioned what this potentially could mean for West African states. The question is, what does this mean for the Alliance of Sahel states, which Mali is a part of, also Burkina Faso and Niger. They left ECOWAS, which is a grouping of a number of West African countries. And so where does this leave this grouping of leaders and of countries now that we are seeing a number of insurgencies pushing in? And really, will we see Burkina Faso and Niger stepping in to support, considering they have their own security situations that they are dealing with? And not just that, if you take a look at ECOWAS more broadly, they've been dealing with a number of their own insurgencies in different countries in various forms. And so again, the question comes back to, from an international perspective, where does this leave Russia's involvement in the region, especially because over the past few years, we have seen a retreat and really a kicking out of Western forces that have been in the region. What does this mean now? What does it look like? And who potentially fills in the vacuum as we continue to see shifting alliances and militaries?
So the analysis was not wrong. I mean, we were targeting some liquidity here. These equal highs. It's just we needed more inducement. The big boys, they want to buy, they need sellers. And that's what they created here. Because we respected the standard deviation of the VWAP. This is the weekly VWAP level. I mean, respected to the T. Get the options markets. SPY is the SPY is also up.
888, the team.
So, and the deltas have followed with aggressive orders coming in. I'm completely taking this news candle here, or the opening there. I could not get an entry. I wanted to buy, but I should have entered at VWAP here. The standard deviation level, it's just a great entry for discount. I was right about taking. I was trying to target these equal highs from earlier. Look at all these equal highs form. They always come back for it at some point. You just gotta be patient. Wait for the inducement. Massive inducement. We had multiple inducements. Inducement to create more, engineer more liquidity, and then induce more sellers. The retail and thinking this is going to be a bearish day, but no. We're seeking back value, back to value, and liquidity.
Something that would be under a lot of scrutiny and for Deutsche Bank, especially given that the estimates are set quite a low bar in that regard. And then another key thing is going to be around the loan loss provisions, especially given that analysts are mentioning they're taking quite a cautious approach to private credit exposure, in particular, given that Deutsche Bank is actually one of the most exposed lenders in the region to this. And then also exposed to commercial real estate.
Politicians are going to try to avoid a recession as much as possible because that's not going to look good for midterms. Which means the Fed is going to print trillions more of dollars. That's what cash here.
Really going to be on the impact
Man,
of inflation and the expectation of higher.
trying to get an entry at the wicks, but I don't know. I just would have been a nice entry here. Got plenty of there on that.
can handle the impact of the Iran war on the clearing demand.
Low hanging fruit here. This was the trade of the day right here after the open. Boom. That's a 70 point trade right there, and it hasn't even taken all the liquidity yet. Look at this.
So much going money,
All this liquidity up here.
a bunch of earnings to get through days, and those are something European banks are working out for, of course.
Bootstrapped.
Running through as well, and then the major geopolitical developments with that Wall Street Journal reporting that President Trump is inclined to keep going on
The highs right there. Looks like that's what it's targeting.
put pressure on Brent weighing up at $111, and then a big
I saw the first inducement, but then I missed the second one because after it took us out, I thought, oh, back down, but aggressive buyers stepped back in, and
and lots of questions about what this means
the weekly level.
influence and influencing
Weekly levels are powerful.
what this means geopolitically as well for the region too. So lots of questions.
Even silver is rotating back to the upside now.
Goodbye. Stay with us. Daybreak Europe. That's Bloomberg.
Um, Silver bounced off of the midpoint, the weekly IB mid. Yeah, it was a weekly IB level. And then gave you a bullish harami and rotated back up.
The memory chip companies are still very cyclical and can see ups and downs in demand and average selling prices of their chips, even if they're switching to multi-year contracts.
That's an interesting point.
Fed FOMC JP will be speaking this afternoon for their decision on rate cuts or what.
Yeah, because I've only been Periscope for maybe like what 2 months now.
Yeah, you're killing it.
2.5.
You're fine.
I mean, I'm just so used to flowing charting, so I'm that like.
Logic you do on SPY and SPX, the ES or MES, and it's the same thing. It's the same thing without the same grease. I think you'll like it. We'll get there. Because we're gonna have a future specific show sometime soon, hopes. And I'm gonna make this guy step.
I'm watching that SPY call premium. Look at that thing just dip it, and your market tide is just pumping right now. You are not getting.
It gave us that initial rejection there, the 7130 we've been watching. Sorry, the 40 we've been watching all damn day. It is interesting to see that 50 moving down to 40. See the 40 building up while 50 is falling off. Still had that build up way up 7,200. I don't know how I feel about that. If Jerome Powell says the right words again, like we said earlier, that kind of move is not unheard of intraday. There we go, built up again. The setups down below are slowly falling off. Setups above are slowly building up. If you are a shorter like I am, I'm not touching shit until they basically get up to 7150 or give me penis basically right here. I don't foresee. Now it is interesting once again that we have that is the DGB chart that I had up earlier. It is interesting. It's the first time we have shift in net book premium and net call premium. They finally crossed over. Net book premium has finally, for the first time today, I finally opened an issue. Net book premium for falling below net call premium. And this coincides with that war shrinks, I think. That was like 10 minutes ago. 5-10 minutes ago.
Yeah,
Yeah, that crossover coincides with the news. So that is a shift in narrative for the day. And as you can see, we're building up above, falling off below. Back tests might be longs now. So if you get a back test 71.30, I would almost long that with a stop below 20. Now in SPX ranges, with 10-point ranges are gonna nuke your contract for scalping SPX. So I would be a lot more risk averse with options and futures here, but I would happily put a 10-point stop on MPS. It's still gonna be a bank slap, but it's a comfortable one. You don't have theta to deal with as every minute passes on your 0-day contracts when sideways, your shit's getting burned up. Well, there's nothing you can do about it. But right now, buyers are in full control after that. And playing, I like the boy, can it hurt you?
I like that shift up, but man, not with this movement though, with how high the windows are almost.
You're always welcome.
I'm literally sitting here looking at my.
You just real quick put your thing on Tuesday on we're not even gonna look at
Yep. We got it.
what the fuck?
When they got the liquidity, that was the target for this morning, and
Now on Monday.
ah,
What the fuck?
so we were able to get in our first trade that inducement, but I missed the second inducement.
I called the initial short and then just done for the day. And then the day before on Monday I actually got shot.
That's why if you stay in higher time frames, you have a cleaner price action and less manipulation, and you can see it's just you see it better. I mean, look at this.
Absolutely.
We're going for London highs.
I call the Trump Queen E.
It's
One tweet sends us,
wow.
50 points in one direction or another in about
Inside bar was a great entry here.
slow grind up like a half hour.
Look at that.
Like if I would have got those calls where I'm
100-point trade right there.
not off out, not even worth it.
But it was just so.
I mean, a lot of sellers got wrecked here off of this VWAP, but I mean,
I saw
fail here. You would be okay if you're shorting this, but it respected weekly VWAP and the daily VWAP here. These VWAP levels offer great entries. Those SPY calls have pushed. SPY calls have pushed this market up.
Yep, that's Sunday. So today will be JPal's last presser. It looks like, y'all. Let's see what homie says to us.
JP's last press conference is today before he is replaced.
Every FOMC presser. So tune into that. That'll be at about noon Eastern on an unusual whales space. Their way to Periscope other pickers like SPY, if not, let's use it on the SPX. SPX is where we're getting all of the CBOE market maker attributed gamma exposure, meaning it's guaranteed with minor corrections. Sometimes CBOE will issue a minor correction end of day, but it's like almost non-existent, whatever it happens. It's actual market maker positioning. There's no customers, it's not retail, this is all market makers. I'm not sure when we'll have more Periscope for other names. We do have gamma exposure for other names. They're just not available on Periscope this time. I don't know for sure, to be honest with you. What I can say is we're gonna have 1 minute intervals soon. And call me. Oh, that's so bad. Because there's a lot of services out there that have like 30 seconds, yada yada. But those CBOE doesn't even offer 30 seconds. So you know for a fact that those aren't attributed positioning. It's not market makers only. It's customers, it's retail, it's everything. So it's not quite as concrete you'll see those things don't take faster, but the pretty far off Periscope because it's not a tribute. Everybody's involved in those numbers. CBOE doesn't even offer 30 seconds, so that's how you know. If a service offers 30 seconds, it is not attributed to that. But the 1 minute intervals are twice.
And to kind of expand on that too, like if you are looking for that gamma on specific names, you can see, I mean, you can look at your, geez, where am I? I mean, you can see your daily gamma levels here. You can get your spot gamma, and this updates, I think, what is it, every 10 seconds? I think it's every 10 seconds.
You
I
would know
think
better
it's
because
every
you
10
actually,
seconds.
I'm a bad.
Yeah. I'm pretty sure it's every 10
I've worked
seconds.
at Unusual Whales since 2021, and I still live on like 3. I live on my super flow page that has my Periscope and my market tide, and then I have an interval flow filter, and then obviously contract lookup and stuff. Sometimes it checks that. But for the most part, I have a very small set of tools. So that's part of it. You don't need to use it. It depends on what you do.
Yeah, I just do it just so I can kind of get that full overview on everything. But yeah, I think it's a 10 set. Oh, maybe if I click at the info tab, you know, with all the info in it, that might help.
Did you already look at the Nokia 11.5? We did look at Nokia. I can't remember what there. Probably Full Metal Max is instead.
Yeah, I can pull it up.
We can pull it up. We like Full Metal Max.
Nokia, what was it again?
The 11.5 for me.
Call, right?
The opposite.
So all could be a put sell here possibly. We have not looked at this
You
one.
noted an ID increase.
Okay, let's take a peek. Let's take a peek. Let's see. So when that flow comes in here, you do see that IB decrease. They are filling the bid here, which is kind of 65.1. So I see where you're talking about that IB increase here at the end. And it is on that big size there too. Yeah, so far these out of the money, 4% out of the money. I mean, with how Nokia's moving, it wouldn't surprise me. They're just buying those at the bid. I mean, it's got such a tight spread. Yeah, that's one thing we don't usually talk about much, having a really tight spread on something on here. Usually it's a wider spread. I mean, coming at the bid, yeah. Let's see. And yeah, your price isn't even changing either, and you get that IV increase. It's an interesting one there. I'd be cautious. I'm just kind of looking at that overall net call premium there. It would be a absolute counter trend one there on this one. I mean, there's not really a bear in sight at all on this one. Let me just look at the kind of where like we'll say we're long. So I mean, you get about a 2% move down there. I mean, there's some chance to see some profit in there. I mean, really strong delta to theta on these. I don't know if I would want to go get. I mean, this is a lot of call premium coming in there. I mean, this is at least right now our biggest day since that April 23rd period there. So I don't know if I would want to kind of counter trend that. I mean, if I did, it would be a very small position there. Yeah, I see what you mean. Good read on that one though. With that, it's there at the end. I would just be
All right, we'll be back for the FOMC this afternoon.
very counter trend there. I mean, that thing's up on